G'day MegaWhale team and welcome back to another video. Bitcoin has managed to close its 2-week candle above the 50 EMA. The loss of the 50 EMA historically has resulted in the beginning of the next leg down for the macro bear market. In today's video, we are going to be discussing what this means. We'll also be taking a look at the short-term price action, going over exactly what we need to see for this next leg down to start on the short term and our short term targets. We'll also be discussing the upcoming interest rate data in less than 3 days time, why we believe this will be a significant event, and what we are watching out for a proper sustained reversal for Bitcoin. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can join us on Telegram, 100% free. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. Let's go ahead, guys, and jump into the content. So as we can see, the 2-week candle has managed to close above that 50 EMA, preventing the beginning of the next leg down for the bear market. We know the bear market generally has 3 different stages. We have the initial mean reversion stage after the top, represented by this red box. We then move into a consolidation phase, represented by the green box. And then when the 50 EMA finally breaks, we enter the capitulation phase, which generally results in large-scale market-wide corrections that last multiple months into a eventual macro bottom and then reversal. Whether or not we take a look on this chart or we move over to our macro monthly chart, we can see a similar pattern has played out with the 50 EMA acting as a major short-term support level where we've seen sideways consolidation develop from, and as well a trigger point where we see macro corrections to these macro bottoms. So a very important level we are watching, and we are thankfully able to maintain above this level for another week. Now historically, we have seen the price action maintain above the 50 EMA for quite some time. We'll discuss how long that generally is, and we'll also take a look at the expectations when the breakdown does occur, if it does occur. Let's jump over to our market data. We'll come back to the macro and the short term for Bitcoin in just a moment. So taking a look at volatility and volume, looking at the volume over here, a 59% surge, 225 billion. I think volume has been actually very low for cryptocurrency over the weekend. If we just take a look at Bitcoin's price action here on a 1-hour chart, this is essentially the weekend we had. The weekend we had was basically just sideways consolidation. If we just eliminate some of these more volatile moves, we're at a range of about 1.2% over about 48 hours. That is incredibly low volatility for Bitcoin. We saw exactly the same thing last weekend. We saw a range of around 1.2, 1.3% over 48 hours. Last weekend, we saw the same thing this weekend. And during the week, we have just seen these larger moves begin at the start of the week, and these larger moves in the middle of the week with some consolidation and chop between. We were expecting a similar style week for Bitcoin this week, particularly because we've got those interest rate results coming out very soon. We'll discuss that in a second. But all in all, the price action has been very choppy, but that doesn't mean we can't identify some very key trigger points which we need to pay attention to. When the price action is choppy, when we are seeing uncertainty and harder to read conditions on the short term, you just need to zoom out. When in doubt, zoom out. Look at the bigger picture, look at the trend, look at the key levels, and that's what we'll do in today's analysis for the short-term price action. So volume up a little bit, no surprise. The week has opened, liquidations up a significant amount, 275 million over here. 421 million, up 275%. A lot of that coming in the last 12 hours, of course, with a lot of larger moves we saw. Moving over to the DXY. Not expecting too much this week. We'll play it by ear and see how it goes. Of course, interest rates will play a massive role in determining how the DXY does move. What we do have are some very clear trigger points. If we clear 100 and maintain above 100, that will add downward pressure to the traditional asset market and the risk asset market for Bitcoin, and of course, everything else. So that will be bearish. If we remain below and we see pullbacks as we have been seeing, we'll see some short-term recovery and short-term relief, unlikely to establish any major macro reversals, but we are seeing some short-term recovery and relief for the S&P 500. The S&P 500 is retesting sell-side liquidity. So as we mentioned in our prior video, if we were going to see any sort of correction, any sort of pullback develop, it is going to literally happen from right here. So this is where we see corrections develop from: major legs down, or we break through and test that all-time high again. Again, a lot of this is going to really rest not only on the interest rate decision, which currently, if we just refresh this page to get the most accurate results, it is sitting, I think probably, 88% over here in favor of an interest rate reduction. It's not so much that we worry about because, of course, that is likely priced in. It is more so going to be the tone set by the Federal Reserve in the discussion following the data release. What kind of narrative are they building up for 2026? And that is going to drive the markets, the S&P 500 following, Bitcoin following, well into 2026, at least for the rest of the year. So let's go ahead, guys, and jump into all of Bitcoin's content. Before we do, go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making the content, and you'll support yourself on your trading journey. Trading on exchanges I use and I trust. Go ahead and check it out. We'll play your ad, and we'll see you back in just a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get into it. I want to start on the macro charts today, discussing the 2-week candle close, also discussing the weekly candle close, and then we're going to jump into the short term, going over interest rates, going over expected moves, going over current price action, going over targets, trigger points, invalidations, you name it. We'll cover absolutely everything you need to know about this short-term price action. But let's just summarize the 2-week, why it's important, what we're watching out for the next macro leg, and then building it down into the weekly, and etc, etc. So as we mentioned, the 2-week candle close has occurred. If we take a look at the macro chart, we do this every single video recently, which is very important. The 2-week 50 EMA has acted as a trigger point for next corrections. As we've identified during the beginning of our video, the loss of the 2-week 50 EMA has resulted in capitulations occurring for Bitcoin. If we very quickly go through all of these events, and we do a percentage drop from the breakdown to the bottom, we will see about a 50 to 60% pullback every time. So it's 57, let's just keep a mental note of that. That was 46, let's keep a mental note of that one. That was about 56. So we're seeing about, 50, an average of about 50% pullback, about 52% pullback on average, every single time we've lost that level. If we were to see a 52% pullback, that would take us into that $46,000 to around $36,000 range. Essentially, it's going to take us just underneath that 200 EMA on the 2-week chart. If we look at that on a weekly scale now, so just going over to a weekly scale, and we load up the Ichimoku cloud and the Gaussian channel, we can see on the Ichimoku cloud and Gaussian channel, we are also retesting some very significant levels. So not only the 2-week 50 EMA is a critical point of support, both the leading span B for the Ichimoku cloud and Gaussian channel lower band act as trigger points for the next expected leg down. Again, if we're looking at historical price action for these corrections, losing that lower band of the Gaussian channel in every single prior bear market has resulted in us entering that capitulation stage, resulting in these larger scale pullbacks, which eventually and inevitably result in macro bottoms and then macro upward reversals. So that is something to consider, guys. And of course, if we're looking at the expected close of the 2-week, it was expected that we were going to close above the 2-week 50 EMA this week. Remember, and as we've said for quite some time now, a few weeks now, it is not expected that we just see the price action relentlessly and aggressively continue downward forever. It is not going to happen. We are going to see periods of upward consolidation or sideways consolidation during this larger downtrend. Just as when we look at the macro uptrend, we had multiple periods of downward and sideways consolidation during this uptrend between these aggressive legs up. In a uptrend, we see downward consolidation or sideways consolidation. In a downtrend, we see upward consolidation and sideways consolidation. That is perfectly normal. It doesn't mean the trend has flipped. It is expected. If we're looking at the average amount of days we see before we break the 50 EMA after retesting it, we did that in our prior video. Just to summarize it, it is around about 80 days. It's been decreasing by 20 each time. We had around 140, 120, 100, and now we're expecting around about that 80-day mark after retesting the 50 EMA that we would break down, and that actually takes us to around about the end of January, early February. So that gives us still about another month and a half to 2 months where the price action may potentially bounce and keep above that 50 EMA on the 2-week chart. Now, that doesn't mean we can't see the price action drop below, but it does mean it is likely we will remain above on the 2-week, closing above on the 2-week. Now, that of course is not a confirmed thing to happen. Nothing is for certain. That is just based on historical price action. We know policy determines demand. So we see policy shifts that could influence the price. That is going to take precedent over historical price patterns. We have to remember that, okay? Patterns don't dictate where the price goes. They are just a reflection of what has and what is happening. Policy drives demand in the market, and demand is what causes people to act, and those actions directly reflect in the price action. Showing us this chart are a representation of where the price will likely move to. So that is a better indication of where the price will move, more so than these patterns. But we know human psychology favors similarity over periods of time, and therefore we see the price action moving in a similar way. It's because the context of how the price action is moving is in a similar fashion, and therefore the result of that similar movement is more likely to be a similar result, okay? Because the market is probabilistic, it is not deterministic. So it is still entirely relevant to look at and entirely relevant to consider, but we have to understand that just because it says 80 days doesn't mean it will be. It might be a little longer. It might even be shorter. What actually matters isn't the amount of days. What actually matters is when we close below that level or if we maintain above that level. So the next question is, well, Whale, what is the range of which the price action will likely remain within, provided we hold above the 50 EMA? The answer to that is actually hidden here in the Ichimoku Cloud indicator. When you'll see already, guys, we've talked about Ichimoku Cloud a fair bit on the channel, but one of the core principles of the Ichimoku Cloud is that when the price action is within the leading span A and leading span B, so within the cloud itself, we generally see more consolidation, more chop, and more indecision in the trend, okay? And that is exactly what we are seeing here. You can see the last weekly candle was quite literally a doji candle. That candle represents indecision at its core. That is just a week of complete and utter indecision. We moved up, we moved down, we ended at the same price the week opened before. That is something of rarity here on a weekly chart. We don't often see that for Bitcoin. Bitcoin's a little bit more definitive action. It's a bit more of a definitive mover. You know, just in the last, let's say, about 12 months, we've only seen about 2 or 3 proper doji candles. And one of them was a long-legged doji candle on the weekly chart. So it's not incredibly common to see such indecision on the weekly chart. And again, we have to look at the context that indecision is likely as a consequence to the upcoming interest rate decision and the fact that we are from a technical and structural level at a significant period. So if we're looking at this chart here in the weekly chart, knowing that the loss of the leading span B would likely result in continued corrections, we can identify that the leading span A is going to be a potential ceiling point for the price action where rejections could potentially develop from moving over the next 80 days, or again, less than 80 days / more than 80 days, depending on if we see that similar historical price pattern develop into this cycle. So that's something to actually consider as well. Of course, losing that leading span B would likely result in the beginning of that next macro capitulation event toward the downside and ultimate bottom of about 50% to 52 to 36,000. So something to watch out for as well. Let's quickly go over the short-term stuff and I'll wrap up the video. So on the short term, there are a few key levels we are watching. Primarily, we are watching the current established uptrend since that 80,000 low. Of course, we can see already there's a trend line up drawn in there, retesting two major liquidation events on the short term, establishing a short-term uptrend. We have also that higher time frame established downtrend from the 6th of October, which you can also see. We are kind of apexing into the middle of this point. If we look at the apex date for that price action, that is actually going to line up coincidentally with the end of the year. So it's the last week of December. And we know already, guys, December is quite an interesting month. If we just take a look at the last week of December last year, actually was a pivot point. So this was the last week of December. We saw a pivot point. We saw a continuation up into the new year. So that may be something to consider. Maybe we're acting as a pivot point before we see that correction this year down into that $74,000 to $76,000 level. But again, ideally what we're watching is going to be the actual trigger points, not speculative patterns. So again, the trigger points we are watching on the daily chart, we are watching the uptrend and we are watching the momentum. These are the two biggest things we are watching. For us to expect this short-term uptrend and chop to continue downward, right? And then potentially risk the 50 EMA being broken early, we would need to see the momentum flip negative. So let's just go ahead and bring that RSI trend line back up. I accidentally removed it. This trend line here, we will need to see a daily pivot below, meaning the RSI will need to close below. And for that close to occur, the price action will have to close at a point of which that facilitates the RSI to close below versus based on closing prices. So we do want to watch that very closely. If we break the RSI trend line, that will be a leading sign to us that we will also as well break this uptrend, resulting in a move to at least 83,000 to again retest the 50 EMA or potentially temporarily break below it and retest the leading span B and Gaussian channel weekly lower band. Okay, those two levels of significance. In terms of reversals, it's very clear what we are watching out for. We've said this numerous times. We need to see, I think it's very obvious, right? We need to see this trend line break. Unless we break the trend line, we're in a downtrend. Really simply, if we flip the trend, this is the trajectory of the price action. I think sometimes flipping the trend does help people understand how the price is moving a little bit better without psychological biases. If you were seeing this trend, would you expect the price to correct? Well, I think if you're a momentum trader like I am, you might be having some inclination here that we are seeing exhaustion, right? Which is completely acceptable. We are seeing exhaustion, and it's one of the reasons why we expected bounces to develop, right? And we've seen this chop and sideways consolidation. That is a result, or that is translating to exhaustion of momentum over here, which we could use as a precedent to expect a correction into this trend line and maybe a breakdown if we see a momentum shift. That is perfectly fine. But it does still represent the trend is downward sloping or sloping in that direction. And therefore, we are still, even if we're seeing exhaustion over here, which is exhausting of the sellers, which is exactly what we are seeing. There's a bit of a battle going on for sellers and buyers over here. We are still in a downtrend. So we need to be identifying that only upon the trend line break do we actually get more confirmation that this trend line will actually, this trend will actually reverse. And even if we do see a reversal, this uptrend in the short term will be a consistent trend line we are watching. So we could see a reversal and break, the price push up to this level, then eventually break back below this trend line, and that will trigger that next move down. That is also a very realistic level. So no matter which of these trend lines break or don't break, they will both act as significant levels into the future. So to give you another example, if we see the breakdown, this level will still act as an important level for reversal in the future. If we see the break up, this level will act as an important level in the future for a correction and trigger for the breakdown. So both of these levels are pending trigger points for directional moves on the short term, which we should pay attention to regardless of whether or not they react immediately on the short term. So that is it for the short term analysis, guys. We've gone over to macro, we've gone over to short term. Let's quickly jump into the immediate hourly price action. Like we said, we are seeing a whole lot of chop. You know, this price action is just complete mental illness. I'm not gonna lie, it's just ridiculous. Now, December is always a weird month for price action. It is, of course, the end of business trading hours. We see businesses close around the 15th to the 18th of December. 2 weeks away for most businesses. The market volume drops. Everyone goes on holiday. We see, of course, Christmas holidays. We see major tone shifts or developments in the Federal Reserve expectations for future economic policy moving into 2026, which can kind of stir the market up. There's an unsettling vibe and I guess a vibe of uncertainty moving into the end of the year because it does set the tone for the beginning of 2026, which can set the tone for the whole year sometimes. So there is a lot of uncertainty with that. We are seeing some chop and sideways consolidation. So it is what it is. That is just the market. Not every month can be fantastic, but hopefully with the interest rate news getting past us, we might have a 2-week period where the price action is fantastic to trade, just like we had at the end of last year. So thank you for tuning in. Have a great day. We'll catch you guys in tomorrow's video. See you then. Bye.